Hi, Investor Nation and Tasty Nation. I had a few requests to show a demo of putting a stop on an options trade. So I was going to go through that today using Interactive Brokers, which is the only platform we have access to in Canada right now. But first of all, let me say that zero DTE trades are not for a beginner options trader. So I really believe that you should have some practice and a good understanding of longer term options trades, as well as the concept of theta or time decay, and also delta, and especially gamma risk. So I have some other videos that talk about those concepts, so make sure you check those out if you don't know what I'm talking about. So once you have some experience trading some longer term options trades using the regular Tasty Trade mechanics, you can look back at this video to see what the heck I'm doing with these zero DTE options. And I'd like to be really clear that I only do this with a very small portion of my account. The majority of what I do is just using the regular Tasty Trade mechanics. So to show one of these 0 days to expiration options trades from my computer, I would have to be home for a full day, and I'm never home for a full day. I actually do almost all of my trades from my phone, but I looked back at my computer archives and it turns out I actually recorded myself doing one of my 0 days to expiration Iron Condor trades on one of my vacation days when I was home the full day. This is going back a little bit, but everything's the exact same now. So I'm going to narrate over top of this video so you can see what it is I'm doing. But I also wanted to point out the phone app can do pretty much everything that I'm showing here as well. Okay, here we are in my IB platform. This is back in January of 2021. SPX is only trading at 37.68. This is just a minute before the market's going to open. You can see I have a chart up here of SPX, and I've got the options chain right below the chart. So on the options chain here, I'm going to click this button here and make sure I've selected all the different options expirations so that they all show up. And now I'm going to click the plus sign here to expand this window to take up the full screen so that I can see the full options chain. And I also need to make sure I select this weeklies, quarterlies box here. So this is the only trade that I would do this for. All my other trades, I would just stick with the monthlies. This was January 19th, so I'm going to select that day's expiration, and you can see the market's been open for a minute or so, and it's populating the bid-ask on all the options chain. I'm going to make sure I turn on my strategy builder here so I can select multiple options. And now I'm going to look at the put side. I'm going to sell a put around the 3 or 4 delta. I'm going to buy a put 50 points wide. And then I'm going to go to the call side and do the same thing. Sell around the 3 or 4 delta. In this case, it's around the 2 delta. And then buy a call 50 points wide. So there it's routed all the legs. And I'm going to try and pick the mid price. I'm going to aim for around a $2 credit or so. My contract size here is going to be 3 contracts. So for anyone beginning here, I would definitely recommend doing just one. The margin impact on 3 contracts is $15,000. That's $5,000 per contract, and I just sent the order. I'm just going to click over to my classic Trader Workstation tab here just to see my order. I find I can see my orders a little bit better in this mode. And I'm just going to adjust my price to the midpoint. Looks like 190 is the midpoint. Update. Order filled. So now if I click back over to the options chain, you can now see all the strikes that I have contracts on. So I'm short the 38.25 calls and the 37.55 puts, and I'm long the wings 50 points wide. Back on the portfolio page, now I have all my trades arranged by days to expiration. So the very top one is this new Iron Condor I put on, and you can see the 4 strikes right there. So I'm going to put in my stop order now. I right click on my short puts and I click close. So it's routing the order to buy back my 3 short puts, and I already have it preset to put in a stop order here, but the question is, what do I put for the stop price? So I look on the right here, and it looks like I've collected almost 134 credit on the puts, so I take 134 and I multiply it by 3 because that's my strategy for my stops, and I get 402. So then I scroll up to, I round that up to 410. So I can click the margin performance button here, and I can see here I was short 3 puts. If this order fills, that put position will be closed. Now let's do the same thing on the call side. I'm going to right click on my short calls and click close. So it's routing an order to buy 3 calls. It already has a stop order in. I'm going to take my credit of 77 cents that I got on the call, so multiply by 3, I get 2.31. And then I just scroll up to that price, round up to 2.4, let's say, Then I'll go and check the margin performance. I was short 3 calls. This will give me +3, which will close out my call position. So I've sent my stop orders for both the puts and the calls, so I can rest easy, so to speak, because I know I'm protected by those stops. It's 9:34, so it's only 4 minutes after the market is open, and I've got my trade entered, and I can just sit back and let the theta decay and collect my premium. So I don't necessarily watch my trade that much throughout the day. I just rely on the stops to protect me. Okay, this is about 30 minutes after the market's open. I'm going to look at a chart of SPX, and this is showing the expected move cone in blue. I'm going to draw a horizontal line that represents my short call strike, which is the 38.25 call. And I'll do the same thing on the put side. So I'm short the 38.25 call and the 37.55 put. So I'm going to put a horizontal line at 37.55. Now that I've got my two horizontal lines, I'm going to draw two diagonal lines going from the opening price to meet my horizontal lines at the end of day. So that's 4 p.m. Eastern. So why am I doing this? Well, it's because these diagonal lines represent the theta decay over the day. And if I can get the SPX price to stay within that cone and within those diagonal lines, then I will keep all the premium that I've sold, because out of the money options have to expire worthless. Okay, so this is now later in the day. This is almost 2 p.m. Eastern, and you can see how the SPX price has progressed throughout the day. It did sort of touch those diagonal lines a little bit throughout the day, the lower line, but SPX is within those two diagonal lines right now, and as long as it stays within there at expiration at the end of day, then I will collect full profit on this Iron Condor. For some reason I had Tom Sosnoff on the screen at the same time I was doing this video, so I guess that's because you just can't get enough of Tom Sosnoff. So this is even later in the day now. It's almost 3:30 Eastern, so just 30 minutes before the market closes, and you can see that SPX has cooperated very well today and has stayed within those diagonal lines. It doesn't always work out this way, of course, but thankfully today was a winning day. And I don't expect anything crazy to happen from now till the closing bell. So if I look back at the options chain now, this is theta decay in action here. It looks like all 4 legs of my Iron Condor are about to expire worthless, which is exactly what I was hoping for. You can see that a whole bunch of the out of the money options right now have no bid, which means they pretty much have no value. Okay, this is now just 3 minutes before the market closes, and as usual, pretty much nothing happened, which is exactly what we want when we do one of these trades. And ding, 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 it's 4 p.m. Eastern, the market is closed. All of the out of the money options have expired worthless, and we've received full profit on our trade. And now I can breathe a sigh of relief and enjoy my evening. So here's a recap of the trade in my spreadsheet on January 19th. This was actually a Tuesday, which is unusual. I guess it must have been a holiday on Monday, and therefore there was a 0 DT expiration on a Tuesday. I placed the trade at 9:32.28. I sold the 37.55 put and the 38.25 call, and I bought the wings 50 points wide, just like I show in my trade plan here. My credit I received on that was $1.91, and my commission was $4.84. Stop I put in was 134 times 3, which rounds up to 410. And since the stop did not fill throughout the day, I kept the whole credit minus the commission. So the credit of $191 minus the commission of $4.84 left me with $186.16, and that was a win. This spreadsheet is in the show notes, of course, and you can make a copy of it if you want to modify it and use it yourself. Okay, thanks for watching, and make sure you check out my other videos on options trading, especially if you're a beginner and you want to learn more about what it is I'm doing here with all these options.